All right, let's get to it. So twin trading, when to add to your position, when to risk a little bit more. What is the indicators to add to your position? There's two things. When you enter a trade and it immediately go against you, you will add a position, or when you see consolidation at your entry, okay? A lot of people get afraid of consolidation, but us being aware that when it consolidates, it's building up orders to break out. So when you see consolidation, you can add to your position because eventually it's going to break out, okay? So I'm going to walk through some setups to show you when I would add to my trade, okay? So we got a massive push up, right? At this very moment, this is not a key area. Looking left, it's not much of a key area. You can look over here, but I don't really consider this a key area. And honestly, I may be mistaken. This might be a key area. Hold on, let me see. Actually, it is. Okay, that is a key area. Take that back. All right, so we reach a key area. Now, we will sell on this red candle, or if you're feeling you're not too sure about it, you will sell once it breaks below this this red candle. So let's just say you took the conservative route and you wanted to sell as it break this red candle. Okay, and we'll be looking for a 1-to-1, right? Now, as it breaks below this red candle, you see how it plays around a little bit. As it comes up, I will be entering another trade over here, somewhere over here, because it's going up and down. I will be entering a trade. Now, look at the risk to reward. Now you have a 1-to-3. We're still doing 1-to-1. Our original trade was right here, but now this trade has turned into a 1-to-3 now. So this is how you get greater risk to rewards on a small setup. Okay, we're still going to base our first take profit off of a 1-to-1 because that was our initial take profit. So why would we change it because we have a better risk reward? No, we're not going to change it. Okay, so consolidation is our best friend when we get into a trade. Again, we're not going to win all our trades, but when we see that it's building up orders going up and down, we know that it's going to break out soon. And as you can see, it had this massive red candle. It pulled back up again, creating demand. You could have entered another trade over here, okay, because we already in a sale, but this created supply right here. This created supply because we have massive selling. So you could have entered again for a sale once it dropped below this candle. And now we're still aiming for our 1-to-1. So now you have a lot of risk on board, and then we get another consolidation. So I'm not saying just extremely load up the lots, but this was a setup that had high chances of breaking out. Okay, so consolidation, and when it pulls back against you, that is an indicator to add to your position. We never twin trade at the first entry. We never do that. Do not enter twice in the same location. Always enter when it goes against you. Okay, so let's go through another setup. Okay, so the market was dropping. This could be a potential reversal. We have a demand area. It pushed out. This is a forex pair, so this is at 8 o'clock. Okay, so we get our entry. It breaks a little bit above this red candle right there, so we'll be entering over here. All right, it breaks above and then it shoots below, right? It shoots below. As this candle shoots below, I will be getting in somewhere over here. I don't know, but I will be getting in again. So now what's the risk to reward? So remember, we're always going for 1-to-1. So this was our initial risk to reward, like right over here. And now since I entered again, now look, another 1-to-3. Okay, this is going to help a lot of people grow their small accounts because people always twin trade at the same location. Stop doing that. Okay, stop doing that. Now you have a 1-to-3 risk to reward. You win this 1-to-3. you can lose a couple and still be up for the end of the week. Okay, this stuff is going to be really powerful. Okay, so always twin trade when it goes against you, and still aim for your regular 1-to-1 far as your first entry. Don't try to do this. You know, don't try to do that because you enter down here. No, we're still aiming for our regular 1-to-1 that we had originally. Okay, this is our initial TP. Okay, so let's just do it like that, and it still turns to a 1-to-3 risk reward. Okay, I think I have one more setup. Okay, yeah, so this is again, this is 8 o'clock. So we have a demand. It's coming down, and we don't enter our trades before 8 o'clock. We don't do that. Forest pairs, we don't do that. So like, you see how this pushed up, then went against you. We wouldn't even be in this trade because it's not 8 o'clock. We have strict set of rules. Okay. So this is 8 o'clock, and we will be entering right here at this available candle. This was the first available candle, and we will be entering. Our stop loss will be up under that wick. Okay. Now, when it comes to stop losses, it don't have to be extremely at the wick. You could do it like a little bit below, you know, like something like right here. You don't have to like hug the wick. It's up to you. I like to hug it, but you don't have to do that. You can put it down here if you want to, but just understand the risk. And this is a Forex pair. So this is a 3-pip stop loss. Like, we're on a 5-minute chart. So this is a 3-pip stop loss. So you having a 2-pip stop loss, like, come on, man. Like, you don't even have to do all that. So just say you did something like this, just to give it some room. Now, it goes in your favor, but then it pulls back. As it's going against me, and I start seeing that the candle is coming back up, I will be getting another entry over here. I'm not going to get it no perfect entry. It's going to pull back against me. But once I see that it's going back up, then I would get in. Okay, so I would be getting somewhere around here, because this candle literally went down and then came right back up. So once I see it's going back up, then I enter again. Okay, so now we're still aiming for a 1-to-1. Now that's crazy to even think about. Honestly, this setup, I'm aiming for more than just 2 pips. That's ridiculous. I'm gonna be honest. So I might be aiming for like 10. I'm gonna be honest, I'm aiming for like 10 pips. And now since we entered right here, now we have a 1-to-6 risk reward, because this is a Forex pair. I'm not going for no 2 pips, okay? I'm just not doing that. So I might aim for like 10 pips, maybe 12 pips, something like that for Forex pairs, especially like USD JPY. This is a really slow pair. So you're not gonna get no 20 pip trades, 30 pip trades. You gotta be okay with 10 pips. Okay, so I'll go for like 10 pips. And have what, a 1-pip stop loss, you know, or what do we have? We had like almost a 2-pip stop loss. So yeah, this is what I look for. It have to go against me or consolidation. Okay, a lot of people are afraid of consolidation just because they always want their trade to go instantly in profit, but consolidation is a good thing. Okay, yeah, that's how I twin trade. That's how I twin trade. Hope this helped you. Let's get to the next video as far as news.